Taxes. It's like worse than a 4-letter word. You know, as a W-2 employee, you have limitations compared to self-employed person. But there's also certain things that you can still do. Like, for example, if I was a W-2 employee, I would start another business. And in that business, you can find ways to offset taxes. Even if the company is small, like even if you start a company and you don't do a ton of revenue, there are things you can put within that company, like a company car that offsets your entire ordinary income. There's investments out there in vehicles that help you offset your tax liability. I'm allergic to taxes. So what really helps when you talk about how to become more wealthy is how do you find mechanisms in vehicles that offset your taxes so you keep more of the money that you earn. That's the game, I don't care what level you're at, that's the game everybody should be playing. And I got really good advice years ago. And the advice was, don't cheap out on your accountant because their sole job is to make you more money. Accountants are there, and the good ones are there to help be proactive in the approach to say, you should be doing these things. When accountants are just order takers, that's not being proactive, that's not helping you. I had a bad accountant years ago, and I finally asked the question of, why are you asking me these things when you should be telling me these things? You want an accountant that's proactive with what's going on in your life and things that you can be doing within your life so you don't have to pay as much money to the government legally. There's self-employed borrowers that get more opportunity from writing off your gas, from so many things, travel expenses, home office, all these things. Those are your typical common expense write-offs, right? So you got W-2 employee, you got self-employed. Your common write-offs over here are those things that we just talked about, dinners and travel and all that stuff. But then there's other things. And I'm not talking about other things like some people online, they're like, you should go buy a plane and you should do that. Like, let's talk within reason, okay? Within reason, there are things like buying a vehicle. So purchasing a vehicle of a certain weight, like anybody that I see, first of all, it should be on both ends, W-2 and independent contractor. Because if you're a W-2 employee, you should start another company for sure and start taking the benefits of being a self-employed person and a W-2 person. You own this company. Now you can have some write-offs against this company, which will offset your ordinary income, which means if you pay too much money into the government as a W-2 employee, they're going to give you money back. Now, quick note on that. People that get excited to get money back, it's always nice to get a check, but what that really means is that you overpaid throughout the year and didn't earn interest on that money that you overpaid. So just kind of think about that. On the self-employed side, and if the W-2 employee has a company that they own, other things that you can do towards the end of the year. One, buying a vehicle, whether it be leasing or purchasing a vehicle to get that write-off. That's very impactful and it's immediate, meaning the whole cost of the vehicle. So for example, if you go out and purchase a $50,000 SUV, you can use that $50,000 against your income in both scenarios. If you lease it, you'd get the lease cost of that year against your income. Now, what does that represent? What it means is if you make $100,000 that year and you buy a $50,000 vehicle that qualifies to be a deduction for your business, you now only pay taxes on $50,000. It's significant. And your bracket, well, I don't know the brackets by heart, but your bracket also probably goes down. So you go from probably paying 32% at $100,000 or whatever the number is, which would be $32,000, to going to paying taxes at $50,000 and the bracket's probably 25%. You would pay $12,500 in taxes. So you would go from paying $32,000 and making $100,000 a year, paying Uncle Sam $32,000 to paying $12,000. You're saving $20,000. That vehicle not only lowers your bracket, you're just not going to pay as much money in taxes. Just that one vehicle, buying that vehicle, lowers your taxes that much. Other things, there are investments out there. And when somebody asks me about, when I get asked the question of residential versus commercial, and I want to make money, I'm not saying you can't make money in residential. I'm saying you're very limited making money in residential real estate. Residential real estate meaning buying a single family home versus buying commercial properties, which are multi-tenant properties or buildings. You can make significantly more in commercial because it's all about math, number one, whereas in residential, you got to hope the market goes up or you got to buy a fix and flip property that you rehab and then make a spread, but then you're paying short-term capital gains tax on that. Like there's so many disadvantages, and I'm not saying you can't make money, but there's a lot of disadvantages to single family versus commercial. On like what I would do if I'm trying to offset ordinary income and get a preferred return is I'm looking at commercial properties and investments. See, a lot of people think I got to go buy the building or I got to go buy the apartment complexes. No, you invest into funds that do that. So that way you don't have to take the whole thing down or go get financing on it. You can participate in the deal. By participating in the deal, you're going to be a partner of the deal, which means you're going to get a K1. And that K1 in the first year is going to give you a boatload of what's called depreciation. You use that against your income. So let's say, for example, let's go back to the $100,000 example. So I make $100,000 a year. I bought my vehicle, it's 50, now I only make 50. Then I made a $20,000 investment into this commercial building. And that $20,000 fast forwarded me $12,000 of depreciation from my initial investment, $13,000, $14,000, whatever it is. Let's say it's 12. So now I'm only paying taxes on $38,000. Once again, my federal income tax bracket probably dropped again. Let's say that's 22%. So now I'm paying 22% on $38,000. Now we're down to $7,000 in taxes. This is just rough math, right? These vehicles of investment through commercial properties allow you to have forward depreciation, accelerated depreciation is what it's called, to take against your income. For anybody, it doesn't matter how much money you make. It's not about my scenario, it's about everyone's scenario. You want to do everything you can to mitigate your tax liabilities, and you need to do it within the year that the taxes become due. So for example, if you make investments by the end of 2025, come April 1, you're probably going to file an extension, which most of us do. And then we're going to go and look and see what are all the deductions we have. When you make investments that not only are safe preferred return investments, meaning if I invest in a commercial fund and that fund guarantees me 6, 7, 8, 9% on my money, I'm now earning interest on my money. My principal's going to grow with the investment if it's in real estate, and I get forwarded depreciation. Not everybody qualifies. Again, talk to your accountant about this. But these are vehicles that we use in order to offset taxes. You always got to be thinking about that. There's also strategies that you can do where you can purchase depreciation. You can purchase negative losses. And again, talk to your accountant about that. But there's a lot of strategies out there that help us mitigate that tax bill legally. For me, what I do most of the time is I have business expenses, personal expenses, and I invest a lot in multifamily because multifamily gives me that depreciation plus interest or a preferred return on my money and the ability for that asset to go up in value. So when it sells, I did better on my initial investment. Things like vehicles. Again, if you're an independent contractor, if you're a self-employed person and your main vehicle is a car, I just don't get it. I just don't get it. Like, why? Why are you not buying an SUV that qualifies so you can get that loss? That's why my main car always has been and always will be an SUV. So is my wife's. I have a toy, that's my toy. But my main car will always be a SUV that qualifies for the deduction because I want the loss. And any loss is substantial. Now, there is recapture, so don't get me wrong. When you sell the vehicle, you get recaptured. I don't know the percentage, but there is a recapture there. But all in all, you win. Another thing that we can do too is look at the stuff around your home. Look at the things that you have. Donations are a write-off, and you can donate personal property. You can make a lot of donations to where, in some cases, you're going to need an official appraisal. But think of all the junk laying around your house that you could donate, and you can get a write-off against that. Last year, we donated, I had all these old lights because we remodeled our home, so I had lights and fixtures, and we had a ton of stuff. And I'm looking at the stuff, and I'm saying, one, I'd rather donate it for a good cause, but two, I can get a write-off against this. So we had an appraiser come out, we appraised the value of what it is, and I got to take that because I donated against my taxes. I think the amount was like $160,000 or something like that. And so I don't have to pay, basically think about this, anything you don't have to pay taxes on, whatever the percentage is, that's what you save. So for me, I think my federal income level is like 42%. So let's say that that was 100,000 instead of 160, whatever it was. I save $42,000 in real money. You need to have a good accountant and you need to have good advice. Everyone's situation is different. But the game is played on how do I do this to where I don't have to pay as much on the income that I make. But when you can make investments with that money that yield you those vehicles to do so, to offset the income and make money on your investment, that's the best of both worlds. And they're all around you if you look. I'd Google it. Google commercial funds. You'll find a bunch of them. I have recommendations on some. Don't DM me because I hate recommending a lot of stuff out there. Like I get asked for contractors all the time because I'm in real estate. And I don't like doing it because if that person does a bad job, you're in a no-win situation, right? Like I know somebody, but what I've learned in my life is I don't like making recommendations a lot of the times because if something doesn't work out for you, I don't want to be that one held liable for it, right? Like, I can offer an opinion. Whatever you do with it is up to you. But that's why I don't give advice like on contractors or like, is this a good investment or not? I will state my opinion, and if those choose to use it, so be it. But we're at the end of the year, so be smart and make some decisions that can help you offset your ordinary income with taxes that you're about to pay next year, because there's a lot of things you can do. And have a proactive accountant and start asking questions to your accountant. What are some of the other things I can do to mitigate my tax bill every single year? Can you help me with that? And if they're like, well, I'm not really sure because of this, get a new person. I'm telling you, you need a proactive accountant in your life. Proactive accountants will save you an incredible amount of money. So that's my advice on taxes.